For retail investors, Wall Street is a closed ecosystem. By the time a major move happens, institutions are inside and everyone else is locked out. In theory, the SEC's 13F filing is supposed to balance the scales. The law requires elite fund managers to disclose their holdings to the public every quarter, but the 45-day reporting window creates a massive information gap. By the time these documents are public, the share prices have already moved, and the information is too old to be useful for most individual traders. If you read these filings one by one, you only see outdated noise. But consider what happens if you stop looking at individual managers and start aggregating thousands of them simultaneously. Individual delays matter less when you see collective momentum. Funds spend months building multi-billion-dollar positions in the same sector. They are creating a massive structural trend that takes years to unwind, turning stale paperwork into a directional map of institutional consensus. This technique, known as cross-portfolio overlap, helps analysts locate active signals hiding inside delayed reports. Take Bank of America. Recent public filings reveal an enormous $30.5 billion concentration accumulated in this single stock. This massive position becomes obvious when appearing across multiple portfolios at once. Value, growth, and hedge funds all independently moved into the exact same asset. When managers with divergent mandates buy simultaneously, it points to a shared institutional thesis operating beneath the surface. We can apply this pattern recognition to the most heavily trafficked sector in the current market, AI infrastructure. The aggregated filings show that institutional capital is flowing well past obvious hardware targets like NVIDIA. Instead, managers are actively rotating down the physical supply chain into secondary ecosystem layers. They are vying heavily into liquid cooling systems and utility providers. That includes a steep accumulation in the nuclear energy sector, with funds taking major positions in companies like Constellation Energy and Oklo. By tracking the overlap, we can see elite investors are securing the foundational physical grid required to run data centers, rather than betting exclusively on the software layer. You can scale this aggregation model up to its absolute limit, extracting a complete macroeconomic forecast from the combined portfolios of 19 top billionaire investors. These are managers whose capital physically moves the market, people like Warren Buffett, billionaire Ray Dalio, and Bill Ackman. This dashboard tracks their combined sector weightings, generating a collective forecast. It reveals they hold a bearish stance on inflation and energy, but maintain strong bullish positions on technology and an expanding GDP. These managers run highly secretive, fiercely competitive strategies. Yet when their public positions are mathematically weighted together, they produce a highly unified macroeconomic outlook. Beyond tracking current trades, this historical data allows us to pressure test how modern portfolios might react to future shocks. Attempting to day trade based on 45-day delayed filings is a reliable way to lose capital. The true utility of this information lies in building models of how institutional capital actually behaves during a crisis. This chart illustrates the 2020 COVID pandemic. It was a liquidity crisis that triggered a 34 sectors tied to physical mobility flatlined, while digital infrastructure like cloud computing rebounded rapidly. By examining exactly how unified institutional capital behaved during past crises, analysts can accurately identify which modern sectors carry the most structural risk today. These aggregation models are designed as educational research tools. They are not guaranteed financial advice or a shortcut to immediate wealth. Modern institutional accumulation is a silent process, masked by the sheer volume of bureaucratic paperwork. Major funds are required by law to leave a paper trail. By aggregating thousands of these regulatory documents, their multi-billion-dollar movements become visible in the public record, hiding in plain sight.